This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade, wrapping up the week and looking at Friday's trade action and much more. Joining us for the first time here on Market Talk, Kristi Van Ahn-Kjeseth with Van Ahn and Company. Kristi, great to have you on the show. Welcome in. How are you?
I'm good. It's such a pleasure. This is fun.
Well, I appreciate the time. Thanks for joining us, Kristi. Let's dive right in. Let's just start kind of overall your thoughts with the grains and oil seeds as we wrapped up the week. It was kind of an interesting week, it felt like. We started with a lot of selling pressure early. Quarter beans kind of tried to find their way back, and then we're pretty quiet to wrap the week on Friday. Wheat found some buying strength after some selling off, some selling pressure midweek. We found maybe a bounce on Friday. I don't know. It just kind of felt interesting. It felt like, again, another volatile week in the grain markets.
Yeah, it's a struggle for the grains to really rally through August in the beginning. Usually August through, September is a tough time. So I think that's consistently like lingering in the background. Anytime the market really wants to get up and going, like you saw it last week, you have those sellers come in and say, seasonally, this is just not the time to rally. And I think that's kind of what you saw in here. We got rain forecasted for a lot of the drier areas. You had a great system, a very slow system, move through some of the driest areas of Iowa, great for their beans. You had some moisture into the eastern parts of the Dakotas, even into the western parts of Minnesota. Here in Alexandria, Minnesota, we've really struggled to get some moisture over the last few weeks, and we needed it, and we got it over the last 2 days. Nothing ton, but probably an inch over the last few days in good rains. So I think that kind of gave the market a risk off as we started to bring in the moisture. But we're in a time frame that's hard, but we're also in a point where we have a crop that's not huge and it's not really, really small. And we're trying to decipher how to pick out these levels and what do we do. And a lot of times when you're lacking some technical information, you can go back to fundamentals. And that's what we had was USDA come in here, slash corn yield, increased bean yield. And I think that caught the market off guard to say, all right, USDA, you're forecasting 0.1 BPA off a record, and we had a very late crop. We had 15 million bushel that was not planted in their survey window, so we knew that they chose to resurvey. We know that those are late planted, and we know that there's a good chunk of beans into the western corn belt that's been really dry. Between North Dakota, South Dakota, and Nebraska, 20% of bean acres are in those areas, and they've been so dry, and we've started to have it. It's not as bad as last year for the Dakotas, but it is still an issue. So I think you kind of have that. And so beans have been holding a key level of support around $14. So their 200-day moving average is just shy of 14. And I think that's a level that we're really going to zone into and kind of be a magnet to for a while until we get some sort of different information. I think Pro Farmer Tour next week is going to be the perfect week to have it coming into this market to give us a better idea on, did USDA justify their drops? And what do we see with pod counts? So I think that's going to be a big thing to watch. But right now it seems like technicals want to be the force. They want to hold support. And then when you look at the December corn market, we're really not getting anywhere. Slightly lower on the week, but overall we're really nestling into the 620 level and holding strong. And I wouldn't be surprised that if you sit here or maybe trend even a little bit lower with seasonals until you get closer to harvest. And then after that, I think once we discover what's in this crop, I think you have the potential to see that demand start to show up and get back into the story of, hey, we have a smaller crop. We can't let it all go away. And so it's going to be an interesting late fall into early 2023 for me.
Well, you mentioned the upcoming Pro Farmer Crop Tour, and I think as well with the USDA numbers that we saw, those were as of August 1st, and we've seen maybe some more deterioration since then. So I wonder, and I'm with you, I think the Crop Tour depending on what we see, could have a real big influence. And I think, to a couple of your points, some of those rains, I think they helped out soybeans in many of those areas. Still, the chance to kind of make the bean crop. Corn, I think corn is going to be probably what it is, maybe adding some test weight with some of those rains. But otherwise, I just wonder what this crop tour is going to show us. Is it going to show some mass deterioration in some of those western states, or is it going to be about close to what USDA saw? And I'm wondering, maybe what have you heard from some of your clients in parts of that region, just how their crop is looking as we head into that crop tour?
Yeah, I think the general consensus is that the crop looks good, even for the drier areas of beans. I don't know if that's maybe, through the Dakotas that their crop was so poor last year. I think they're saying, hey, anything's better than last year. But you do still have that issue that everyone's, for the most part, saying the crop's really good. Now you check on social media, you can see that guys go out into the field, the cobs aren't there, they have tip back, they're having pollination issues. We were very hot during pollination. We were recently down through southern Minnesota into parts of northern Iowa, and things looked good from the road. And that's the difference. That's why I think it's so important for a pro farmer at this point, is that things do look good from the road. Obviously, USDA is seeing something different, that they're choosing to decrease that corn yield. And not only USDA, but satellite imagery has had some very small yields. FBN, DTN, both of those have been very, very friendly yields. They have stated that it is trending higher for the yield for corn, but at this point it's lower. And I think that's going to be the biggest thing, is to get in there, see what's in field. I look at last year and we had some major problem areas. The Dakotas were just absolutely fried. Minnesota was absolutely fried. Where we are in our neck of the woods in central Minnesota, west central Minnesota, if you did not have a pivot, your crop was toast. There was nothing you could do about it. And so I struggle to say the crop is going to be that much lower, considering we had major problems. This year, not everything is perfect, but it seems like the areas that are poor do seem to be smaller. I think we also know that seed genetics have put a ton of money into drought tolerance, and that's what we had this year in a lot of these areas. So how well do these hold up? And then also we know that the plant is really good at conserving what it needs. And you can come in here and say these areas that are dry, the Dakotas, Nebraska, maybe not Nebraska, but the Dakotas did come in with moisture into planting. They came in quite a bit of moisture. They couldn't get planted. There was so much. And so you wonder, is that going to kind of benefit that crop along the way? So there's a lot of unknowns yet, but overall, I think that over this next 3 weeks, you get Pro Farmer, and then this next September report is going to be USDA's first report that they're actually boots on the ground. I think both of those are going to be a unique look, and typically you can see some really big shifts in a report from a satellite imagery to a farmer survey. And so I think that's something to watch. But the biggest thing for me to focus on is that we want to talk production. It's a huge aspect right now. It's great to talk about. But also when you look at it, USDA has kind of pegged its balance sheet really well to be able to blend off yield increases and decreases. So you look at corn demand, for example, they're kind of like right down the middle on corn demand, that they could easily increase or decrease areas of that to offset any sort of change. So until we get post-harvest, I'm worried that you're going to just see kind of a balancing act from USDA, that they take away from one area, they add it into the other area, and you're still net result coming in with a carryout level that's pretty similar to what they had. One thing to note is that when they did increase the carryout level, or the carryout level as well, but the yield for soybeans, they didn't really change that farm price average for soybeans. They kept it very similar. And I think that's one thing they're noting, is that you might have changed this dynamic, but they're still expecting to see some strong prices throughout the year.
Kristi, talk to me a little bit about risk management and just some thoughts. We kind of settled in some ranges here in corn and beans, as you've mentioned. If I'm a producer, I start to have a pretty good idea of what my crop looks like here heading into fall harvest, and maybe I'm a little light on sales. What are some of your thoughts, and maybe just a few thoughts on strategy here? Am I looking to maybe sell some cash and own it back on the board later? Am I looking at some put options? What are some different things that you would think farmers need to look at in their situation here?
I think the biggest thing is what has to go to town at harvest, right? So I'm hoping that majority of what needs to go to town at harvest is sold. We're 60% marketed some way, somehow on both corn and soybeans for this crop. And one of the biggest things I'm focusing on right now is beans that have to go to town. If you look around central to west central area that we're in, the bean yield is very strong. You have a lot of end processors that are 20 under for harvest basis right now on soybeans. A few years ago, we were $1 under around here for harvest delivery basis. So right away, you're seeing those strong basis levels. We're still at strong prices when you look at it overall for soybeans. I think that's one thing to note is that I'm not opposed to sales at this level. I would not re-own them back right away. That doesn't mean that I'm not bullish by any means, but I'd like to see this $14 level hold. And if it doesn't hold, then you're probably looking at coming back to some of those recent lows where we got into the low 13s. So that's what I'm focusing on beans. Corn's a little bit of a different story. We know that the corn crop isn't going to be huge around us. We had quite a few late starts. We had some shift around acres. We know that the crop isn't all that well around here. I'm surprised that the basis levels haven't been stronger for the corn market. And I don't know if they're giving it a little bit of time to see. But right now, basis levels are a little bit weaker than you would anticipate for corn. So I'm being a little patient on corn. If you wanted to, you do have October and November cereals off of December out for options. You could look at some puts. They're still kind of expensive. But right now for corn, I'm going to let it see if this $6 holds. If we start to break $6, I might look at something here, whether that's a sale or a put. But until then, I'm going to let this market do its job, and hopefully we can get back up to those levels. What I'm watching for on the top side would be, we came a spike high of on this recent pullback, 658 on D's corn. That 650 level is probably where I'd be looking at some more sales. Hopefully we can round out an 8 to a 10 cent carry out to March. March is kind of that time frame I'd like to have my HTAs out. Some guys don't like to deliver in the winter around here, and I don't blame them. But usually you can get some really great basis opportunities for corn into January just because the bin door is shut. And I'm going to be honest, I don't blame them. If I was done with harvest, I worked all year long. It's cold. I'm ready to take a vacation. I wouldn't be delivering grain, but those are some of your best opportunities. So if you can get out to that March contract, that's what I'm really looking for. The wild card here is spring wheat. When you look around here, spring wheat basis is poor. We're well off the highs. We're at levels that we have not seen in almost a year. The last time spring wheat was 850 was back in November of 2021. We've taken all the premium out from Russia and Ukraine. That's where I'm struggling, is saying, if you have the room, it might be worth some time, but you also have to be prepared because the charts don't look pretty for wheat.
Yeah, and let's talk a little more on wheat. You and I were chatting about this before we jumped on air. It's just been kind of wheat's been doing wheat things, for lack of a better term, here this week. And you look at Friday, was it maybe that proverbial bounce to wrap up the week? I know we got some geopolitical issues, some worries about the nuclear power plant in southern Ukraine, but then you watch everything else. And then to your point, looking at spring wheat, I'm just I don't know what is going on in this wheat market right now, plus rains in the southern plains that could help out planting here in just a few weeks down there when they've been very dry. So I don't know what to make of this wheat market. What are your thoughts?
Yeah, wheat is troublesome to me because, like I said, you gave up all the premium. So we know that there's still issues in Russia and Ukraine, right? But you start to get these like random tidbits saying, the president of Ukraine coming out and saying that if Russia really wants to end this war, they need to be out of our country, and then we can start to have some talks. And it almost hinted like they were working towards that. And we hope that they've continuously worked towards trying to end the war, but it really hasn't been something to talk about lately. And now that they're bringing that up, I wonder if you aren't going to have that. But regardless, you took out Russia or Ukraine alone over 12.5 million metric ton of exportable grain and for corn. And so you're taking that out. We know that China's been extremely dry. And so we want to think that maybe that crop is going to need some adjustments, some fine tune. But overall, when you look at Ukraine and Russia, the issue is still there. The problems are still there. You kind of poke the bear with having the US bring people over to Taiwan when you talk about China. And so I really think wheat has the potential to have that story, but until it has that story, the demand is not here for the United States. We can't pick up any demand. Basis is showing that in spring wheat. Spring wheat has a good crop. Like you said, the rains are coming. So you can really make an argument on both sides for the wheat. What's going to be interesting to me is the acre battle moving forward. Is do you really want to be planting the wheat with all of those unknowns? And for winter wheat, if you can get the moisture in there, I think that's a no-brainer. But when you start to talk about spring wheat and you're seeing some other prices that are, getting to the bottom line and you can make money on them if you make those sales, I think it's going to be a struggle for guys to be planting wheat. And even the guys that are harvesting spring wheat right now, discounts for disease issues. And it seems like, wheat to me is something that would be extremely hard to grow because a lot of it is out of your control. And you never know what you're going to get docked. You never know what your protein is going to be. And I get that you have unknowns with the rest of the crop, but I feel like spring wheat is a different beast. I always joke because my dad, he's retired now, but he always had a Post-it sticker that said, "Don't trade wheat." And I always go back to that and laugh about it from time to time because that's what I feel about wheat is it's a big unknown. Right now, if guys are sitting and saying, "I have no wheat sold, what do I do?" If they have availability on the farm to hold it, I'm going to hold it for a little bit and see if we can round out of this 850 level.
Kristi, let's talk a little livestock as well before we run out of time. This hog market, I've been someone who thought that, when August went off the board, the October contract was going to go up towards cash. Well, I think I'm getting proven wrong here this week. This hog market's taken a beating. Any thoughts with what's going on with hogs right now?
Yeah, I am right there with you, actually. When you talk about October coming up to August, it seemed like the feasible way to marry the two contracts is that it would be October coming up to August. We aren't seeing that. I think a couple of reasons we aren't seeing that is funds have been extremely long hogs, and I have a feeling that they're probably liquidating to a degree. And cash trade has been a little bit on the weaker side. It hasn't budged too much, but I think it doesn't give that incentive to get October up and going. But right now, I think the biggest thing for the hog market is actually funds versus anything out of our control more than that.
How about in cattle? I know Cattle on Feed report here this afternoon. Trade felt on Friday like it was just kind of choppy ahead of that report, which I think is fairly typical. Oh, I mean, we look at some of these price levels. A lot of folks I've talked to have been pretty bullish the cattle market for a few months. What are your thoughts, or what side are you on in this cattle market as you look at things here towards the end of August?
Yeah, there's a lot of reasons to be bullish cattle right now. When you look at it, we have low inventory. Our slaughter pace is a lot higher. Our demand is really strong. There's all those reasons too. Seasonally, we take a little bit of a dip here, but in about a month from now, we fire right back up. So cash is strong. And I think all of those reasons are giving it to you to say, hey, I'm friendly to this market. Managed money has been buyers of cattle as well. And my only worry is when you look at the feeder cattle market, you're at 2 standard deviations to the top side for chart action. And when you get that far away from trend line, it brings in some other people. And so I'm a little worried that you might take a look at commodity indexes as a whole and say, all right, what is off of what is at its high? What is well off of its high? What do we see as a buy? What do we see as a sell? And I'm afraid that you could potentially see feeder cattle giving that opportunity when you pull up, don't put the name on the chart, just pull up a chart and see it. It's rallied a ton and there's reasons to sell it and there's reasons to be a marketer here, but that's about the only reason you look at it to say this market's going to slow down. Otherwise, as long as demand domestically and worldwide continues to keep pace and we're seeing those lower numbers, I think there's a reason to be cautiously friendly to the cattle markets.
Well, Kristi, I've enjoyed this fantastic stuff, and we didn't even get into a couple of my favorite topics, usually the outside markets and talking computer algorithms in this market trade and everything else. But before we run out of time, the open-ended question, as always, any final thoughts you want to share with us or reiterate before we wrap it up?
Yeah, I think maybe the biggest thing to focus on right now is probably the cash side of things. If you have basis, carry, both have opportunities right now for a lot of areas. So you have harvest coming, you have grain that needs to go in town. I really think it's worth 10 minutes to sit down and say, hey, cash flow purposes, do I need to sell any of this? Do I need to look at it? Basis opportunity, what do I see there? Carry opportunity, what do I see there? And I think that's a forgotten part of the market, right? It doesn't have that lure that you have for futures, and you hear people talking about chart actions and technicals. Everything comes back to cash trade, and we need to remember to stick on basis and carry, because those are huge components to your farm operation.
Well, Kristi, again, great stuff. If folks have questions, want some advice, want to reach out to you or the team there at Van Ahn and Company, what's the best way to do that?
Yeah, you can call us 1-800-648-5494. We have a slew of guys that work with us. They're all great guys to work with. And the nice thing is we all bounce our ideas off each other. And that's the key is making sure you have kind of that well-rounded approach.
Well, and I know as well, vanonco.com. They can find you online there very easily. With that, Kristi Van Ahn-Kjeseth with Van Ahn and Company. Appreciate the time. Thanks for joining us on Market Talk. We'll get you back on again real soon.
Yes, this is perfect. Thank you.
Find us online, markettalkag.com. That's going to do it for today's show. I'm Jesse Allen. Have a great afternoon.